Welcome to FinTech Forward. I'm Dale Lazick, and today I'll be interviewing Ray Brash, CEO of PPS. Since Ray took over in 2012, the company has had year-over-year 10 times growth in FinTech, retail, employee benefits, and corporate payments. As a leading processor and issuer, the company manages approximately 2 billion transactions a year, worth about $36 billion. Ray, welcome, and thanks for joining us today.
It's great to be here, Del. Thank you.
Absolutely, thank you. So I'm fascinated. How does the company that you inherited compare to the PPS of today?
Well, you mentioned the size. We've had 10 years of growth at 60% a year. And that's one thing that's probably the biggest factor. I guess when I came in as CEO, I'd been with the company 5 years before that, actually. So I'd seen how we were developing. I think in those days, we were in the early days of prepay. So we were kind of focused on what I would say was prepaid 1.0, your typical prepaid card, limited usage, quite niche, fees, those kind of things. And we were also pretty heavily reliant on retailers. That was a big part of our business. We were starting to explore mobile, working with some of the big telcos. And it was in the days where the telcos thought they were going to take over payments, That's how long ago it was. And we were also starting to look at corporate payments, but very, very early models. But I guess the company had been created in 2009 as a joint venture. It had been founded before that, but it was a joint venture with Mastercard and Edenred. And I think after 3 years of the joint venture, it was probably struggling with a little bit of lack of direction. That's kind of the business, I think, that I took over.
That's fascinating. I didn't realize that you had such an inside view. I'm sure that must have been.
Yeah. I always say, I was the finance director, CFO, since 2004.
Oh, my goodness.
I saw our first ever Mastercard transaction, literally on a report. One transaction. Now we do billions, So wow. It's funny when you see that.
That's amazing. Tell me, what initiatives did you put in place in the early days to gain traction?
Well, I alluded to perhaps we had a little bit of lack of direction. So I did what, basic strategy really, which is what were the assets that we had. And I could see that we had some good experience in retail, good experience in mobile payment space. We were working with some pretty interesting brands like PayPal and guys like Virgin Money. National Australia Bank. So we kind of were in a good spot in terms of our relationships experience. The platform was very smart, but we probably weren't using it to its potential. And we had some other assets, regulation, and we had a strong service culture. So we had a lot of the things in place, but we probably just lacked a little bit of direction in terms of where could we take this. So once I'd established that we had some strong assets, first of all, looking at where we wanted to go, the virtual card space was starting to become very big in terms of corporate payments. So that was one area that I kind of identified with my board and my strategy team to say, well, this is an area to go. And then the other one was the early concept that you could do ACH banking type products, but not be a bank. And this was early regulation that was allowing smaller, more nimble companies like ourselves to compete with the big retail banks. So that regulation was coming in. So I could see that those two areas were quite interesting to go after. So then it was just about putting in an execution strategy, which for me meant having a flatter organization with very, very clear roles and responsibilities for my executive team. We kind of segmented solutions and operations, which had been combined, and I think there was a bit of a conflict there. So by separating solutions and operations, I think the most important thing I remember doing was I said to the solutions team, I want to do this banking thing. We really don't know exactly what we're going to need to do. But I said, don't worry about signing a customer. Don't worry about revenues. Maybe don't worry so much about costs, although, I'm an accountant by training. But it was very much about, forget about all that stuff. Just lock yourself away. It took 3 years, but lock yourself away and build a banking solution. And then let me worry about how we can sell it, but don't worry about the revenues. And I think that was, in hindsight, worked really well because we just didn't have any constraints. We were very fortunate that because we were owned by 2 corporate investors, Mastercard and Edenred, which is a global prepaid employee benefits company, we were able to invest without perhaps the super strong scrutiny that I might have had if we'd still been a private company. So I was pretty lucky there, actually.
Wow, that's amazing. It sounds terribly brave to just.
I think, brave, it's like necessity is the mother of invention. And there's nothing brave about, trying to take the company forward where there was no other option. The company was doing a pretty good job of providing services to one of its shareholders, and it could have carried on doing that. But we also had an investor, Mastercard, who wanted to see how we could help enable more business through the Mastercard ecosystem. So, if it hadn't have paid off, we would have been back to square one, which wouldn't have been such a bad place. But we'd seen a lot. We were great admirers of companies like Green Dot, for example. And that's actually where our original strategy on prepaid came from. And we looked at, and we had some Californian VCs actually in the early days. So we were kind of clear that if you could get the proposition right, then the small niche market that we were dabbling in could suddenly become trillions of dollars. And that was, so we didn't have to get it exactly right to be in with a good chance of doing it. I have to say, I never really dreamt it would be as big as it's been, but that's luck. Frankly, that's just luck.
That's amazing. And also, I'm interested, you mentioned that you made the organization flatter. I would imagine that helped you gain momentum. What other factors would you attribute to your consistent year-over-year growth? What's fueling that?
We've got a scalable business. We own our technology, and therefore we can absorb growth. And a lot of companies will face the cliff where their technology can't cope with the increase. And it wouldn't be fair for me to say that it was all plain sailing for us. I mean, way back in probably 2013, as we started to see growth in some of our corporate payment businesses, we started to realize the platform needed a bit more investment. And I think in probably the last 2 or 3 years, as we've worked with more cloud-based clients, we've realized we also need to make our platform more cloud-enabled. So those things have been, we were lucky. As I said, we were lucky because we had the investment of strong shareholders who realized that we could invest in that. So I think growth is about having a scalable business. And in transaction processing, you can be processing, 10 million transactions an hour or 1,000 transactions an hour. It's just a question of architecture and scale. And, if you've got those things right, then it doesn't really make any difference.
That's true. And you've also built a very impressive, multifaceted global company. How do you achieve cohesion across your enormous ecosystem?
Well, what we did is we matched our organization from a client-facing point of view. We matched it based on the industry sectors. So the big 3 industry sectors we're in now, retailers, payment companies, and employee benefit companies. And so what we have is we have separate client engagement teams who are doing the regular service management, we call it. We've got a strong service management culture. Their job is to be on the side of the customer. So when, there's an internal constraint in terms of a project, they're fighting for that, but also understand how our technology is applied in our customers' markets, because a retailer is using our technology in a different way than a challenger bank, than an employee benefits company. At the core, the technology is actually the same, but how it's applied is different. So our service managers have good industry expertise, so that keeps our clients comforted that they know that we know their business. And then the flip side is, from an operational point of view, we have a single vision of our platform. So by having a single vision of our platform, we're able to invest, knowing that, again, one transaction for a challenger bank is the same as a transaction for a retailer, is the same as a transaction for a fuel card company. It's the same technology at heart. So we can really invest in making sure it's resilient. So it's those two things, really, having a central core, but making sure you're really customer-centric where it matters.
As you continue to grow, what trends are you seeing in FinTech, and how are you adapting to those trends?
So certainly in Europe, FinTech has been pretty strong for 5 years. So there have been some trends that have been coming on, that we're still in the middle of. So I think those are just going to continue. And I think the main trend there is about companies who are digitally engaged with their customers moving into financial services, as opposed to traditional retail banks who frankly have not been great at that. That trend will just continue. And, I was looking at, I did a presentation on FinTech to my staff the other day, and I was looking, there was like 20 different versions of FinTech you could look at. And everywhere you looked, there was a company that was starting up in that space, whether it was pensions, insurance, mortgage, et cetera. So there's still a long way to go, I think. It's a £29 trillion market, and it's untouched in many, many parts. So I don't think you necessarily need much more than that to see the trend. I think in terms of the way companies are working, they're clearly a partnership ethos is very strong. I think technology companies understand the importance of partnerships, interoperability, in the same way as if I've just come off my running machine, I could kind of link my running data with 27 different apps just like that if I wanted. And I think the same thing is going to happen in financial services. In Europe, and I see in other markets now, it's been driven by a move to have standards. Payments are not quite the same as, my running data on my Strava app is not that important compared to my bank balance. So there's obviously going to be some tolerances that you can't go over, but the standards in open banking are designed to create that same interoperability that you would expect in any app as well. So I think that's how companies' partnership with the interoperability that things like open payment standards will bring. And then a general movement to the cloud. If you wanted a technology trend, in our business, we still have quite a lot of physical architecture in data centers. And, I talk to some of my FinTech customers who have no physical architecture at all, and they're saying, well, why have you got a, big Oracle machine sitting in a data center? so that cloud thing is definitely something we're looking at. We're probably 15% in, but our objective is to get to 100%. So I think those are the big trends for me.
The other thing that's interesting about your constituencies, you seem to touch not only the enterprises, but as we call them here, mom and pop retailers, or as you may refer to them, Fred in the Shed. And I recently listened to the Future of Banking podcast, where you were interviewed about how to help small and mid-sized enterprises during the coronavirus. And what additional insights can you share with our viewers about some of those initiatives?
Yeah, I think, thank you for listening to the podcast, by the way. I think the one thing I recall saying was that, and the phrase I'll use it again, not my phrase, but comes from the CEO of Edenred, is, fix your roof when the sun is shining. And a lot of companies that are successful had thought about digitalization, had understood the trends towards e-commerce, had understood the trends towards biometric payments, had understood cross-border and everything else. And the coronavirus is kind of, if you wanted to make an environment that was suited for all of those things, you probably couldn't come up with any better. It's an unfortunate way of proving it, but that's the reality. And therefore the companies, whether they're startup fintech challengers or retailers who were thinking like that, are the ones that are doing much better. I mean, no one's doing horrendously well. I mean, it's not an easy environment at all. But I can see in my client base, those ones who had understood the need to do all those things were kind of ready for it. And also organizationally, companies that were used to remote working, were already doing video conferences, were doing everything digitally in terms of their work. Those were the ones also that, it hasn't really made a big difference to the way they operate and, their core products. So at PPS, we're there to help. So we've, been helping our customers become digital for 10 years. Edenred is a great example. So Edenred is one of our shareholders. They're the world's largest company in the sort of employee payments benefit space. And when we were acquired by Edenred in 2007, all of their products, which are distributed to employees, were paper books, little paper books that were shipped in big, huge, secure boxes of armed guards. They were delivered to the HR department. The HR department would walk around the floor, handing out these books, checking who you were, and all that sort of stuff. And then these books, you'd rip out the voucher, go down to the restaurant, pay for it. The restaurant would, at the end of the month, they'd have to collect all of those different vouchers, put them in a bag, go to an encashment service, put the vouchers over, get the money in cash. And Edenred had its own printing. It had its own printing plants. It would print its own vouchers. They were like, no, that was a company that was not digital at all. Since acquiring PPS, they're now the leaders globally, and certainly in Europe. The majority of their products now are digital. They're one of the leading issuers of Apple and Google Pay. So the old paper voucher is gone. And now you can use contactless, use Apple Pay. They've integrated to delivery partners, so even now the restaurants in some countries in Europe they're shut. They're just opening gradually. The people can still get their lunch delivered through Deliveroo or Uber Eats or those sort of things. So that's a company that was already thinking digital, 10 years ago, let alone 1 year ago. So we help those companies do that.
That's an impressive case study. And as you look,
I hope so, because that's how we sold the company.
Wow.
It took quite a while in the end, but it did prove that the price that they paid for PPS in 2007 was worth it in the end.
Absolutely. As you look ahead, what are some of the trends that you're seeing, or how do you anticipate the FinTech world to look after all of this, after the world reopens? What will it look like?
I think it's going to be in relatively good shape. Relatively good shape. Certainly, I look at all of the clients we work with, who are all venture capital funded. They've all received injections of cash during lockdown. Some discussions obviously were happening before lockdown. None of those discussions were curtailed. So there's the investor community in FinTech absolutely believes these companies are here for the long run. And the factors that people are now thinking about in commerce that coronavirus and lockdown plays to the strengths of many of these companies. So, investors are still going to invest. In Europe, they're talking about negative interest rates in the UK. We already have it in the EU. So, investors are saying, okay, I don't want to put my money in a bank. Where can I invest? And I think the FinTech businesses are ready for it. I mean, I had one customer who's working a pretty successful FinTech challenger. They're not huge. I mean, they have 25 staff. They had a WeWorks in London, and they left the WeWorks, obviously, to remote. And the CEO says, do you know what? I may not go back. I think this is just fine. Maybe we'll meet once a month for a beer where we can. But, we're so digitally enabled, and our business is, cloud-based. We have the technology. So I think those companies, the lockdown could carry on for quite a while, and those companies would be affected. So I think they will come through. We see that, retail banks, they had enough problems before coronavirus. Those problems have only got worse. The issues of branch networks, the issues of capitalization, the interests of lending, all of those things are not great trends for the retail banks. And that's predominantly where my customer base is playing, the sort of retail space. But we also see huge trends in corporate banking, in corporate payments. And that's really untouched. Think of the size of the corporate payment market. We are working on a number of very interesting projects that will transform the way businesses are paying for things and paying each other. And so I think that's one of the big roles that FinTech has to play, is in the same way as they've shown an individual what a great payment experience can be like, whether that's a Klarna or a TransferWise or an N26 or a Monese. They're now, the opportunity is to say to a large corporation, you don't have to suffer, in the way you've been suffering, in the way you're paying your invoices, in the way you're paying your staff, in the way you're receiving money from your customers. This is a new way of looking at it. It'll take a bit more investment, because it's relatively easy actually to launch a consumer payment product actually and get someone to download it on iTunes or Google Play, integrating to a large enterprise. But there's plenty of examples, and we're working on some of those as well. So I think that, I would say that's a really untapped area of FinTech that is going to be huge compared to what it is today.
Well, I'm intrigued. You said you're working on a few. Are there any initiatives that you can share that are on your near-term roadmap?
I can, yeah, sure I can. So in Europe, we're working with Edenred, our partner, on a program that's live actually, which is in France. The largest real estate management company is a company called Foncier, and Foncier effectively manage the service charges between tenants and landlords. They're kind of administering all of those things and additional grants and that sort of thing. So we now use virtual ACH accounts, virtual IBANs, to give individual tenants and individual landlords records their own IBAN. So money is just moved between IBANs, and there's no reconciliation because there's no need to go through a bank and say, well, that's there, that's there. It's instantly available, and therefore that's much better experience for the individual, because they know the money's in, because they can see it straight away. They can get a notification, immediately it's in. No need for back office reconciliation. So that's one nice example. We have another one. We work with IATA, the International Air Travel Association. Obviously, at the moment, they're not as busy as they'd like to be, but we are behind a global virtual card system called IATA EasyPay, which allows for travel agents and booking agents in 117 countries to pay for flights into the IATA system, and they'll go on record as saying in the payment space for airlines, there's something like $8 billion a year is spent on credit card fees, and the IATA EasyPay solution is a much lower cost solution. That's they're rolling out across travel agents to reduce the cost to the airline industry. So, couple of, they're pretty big actually, but they're small in a way, because IATA do $300 billion of payments a year, but even that compared to 29 trillion is small. That's just one ecosystem that's being addressed.
It really looks like you have limitless opportunities ahead.
Well, yeah, that's the problem, isn't it? When I think the thing, payments, there's a thin line sometimes between getting it absolutely right and getting it really wrong. And you look at it and you say, well, why did that fail? Why is that so successful? You look at something like the difference between what Apple Pay, Google Pay have achieved compared to some of the previous initiatives, whether they were driven by the telcos, whether they were driven by the banks, themselves.
Right.
I mean, I think consultants have lived forever off those type of programs, and I remember we had a very successful program with Orange and T-Mobile, which had a joint venture called EE in the UK. Wow. And we launched it 2000 would have been 13, 14, but it was very complicated. It was great, only worked on Android phones, and contactless payments, Transport for London, all that sort of thing. A great app. Wow. But it was but the engagement was tough.
Oh.
You had to be an EE customer. You had to have a certain kind of phone. Mm-hmm. You had to download something. You had to do X, Y, Z. And at the time, I think it was the most successful program that Mastercard had in mobile payments. Okay, Apple Pay launched, and I think in a few days they had overtaken the transactions we'd done in a year.
Right.
and the difference was it was just user experience. That was the only difference. Right. The technology actually under the hood was not that different, really. Worked more or less in the same way. But the user experience was, as we say, chalk and cheese. So in payments, you can get it really right, you can get it really wrong. And unfortunately, it means that, you still have to try again. And they say we didn't make it first time around with EE, but now we're the largest issuer of Apple Pay and Google Pay anywhere in the world.
Well, clearly this is still a developing story.
Absolutely. Yeah,
Thank you so much for your time today, Ray. I've really enjoyed our chat.
I have too. It's been great. And, I think it's an interesting time for payments. It's an interesting time for us to learn. As Nelson Mandela said, you win or you learn. You never lose.
Touche. Thank you.